This video covers JR West's financial results for the full fiscal year 2025, from April 2024 to March 2025. JR West, West Japan Railway Company, is one of Japan's major railway operators. It runs trains mainly in western Honshu, including Osaka, Kyoto, Hiroshima, and the surrounding regions. JR West operates local commuter lines, express trains, and the Sanyo Shinkansen, and it is also involved in station retail, hotels, and real estate. Highlights. In fiscal year 2025, JR West's revenue and income increased year on year for the fourth consecutive year by steadily implementing measures from its medium-term management plan, and results exceeded forecasts. For fiscal year 2026, the company aims for consolidated operating income of 190 billion yen, which is higher than its medium-term management plan update target, by capturing demand from the early opening of the Osaka Kansai Expo and maximizing the benefits of its city development projects. Regarding dividends, based on its basic policy of maintaining a payout ratio of at least 35%, it set a dividend of 84.5 yen for fiscal year 2025, an increase of 10.5 yen from the previous forecast, and plans to pay 86 yen for fiscal year 2026. Additionally, in the first half of fiscal year 2026, JR West will buy back the remaining 50 billion yen of its planned 100 billion yen share buyback to restore EPS, earnings per share, to pre-COVID-19 levels. Overview of fiscal year 2025 results against fiscal year 2024. Consolidated operating income increased year on year to 180.1 billion yen. In the mobility business, income rose by 11.8 billion yen compared to the previous year, supported by the extension of the Hokuriku Shinkansen to Suruga, strong inbound tourism demand, and growing leisure demand. In the retail business, income also increased year on year, reaching a record high in the goods and food segment due to strong sales at Station Concourse stores, good performance by hotels and department stores effectively capturing inbound demand. In the real estate business, shopping centers achieved record profits thanks to strong sales in the Kyoto-Osaka-Kobe area. However, higher expenses related to opening the Osaka and Hiroshima projects caused profits to decline in the real estate lease and sales business and the hotel business. As a result, overall real estate business profits fell by 5.5 billion yen year on year. In the travel and regional solutions business, profits decreased by 6.7 billion yen from the previous year, mainly due to a reactionary decline following COVID-19 related contracts. Value creation originating from the Osaka Kansai Expo. For fiscal year 2026, Osaka Expo is a major factor affecting JR West's performance. The expo is being held for 184 days, starting from its opening on April 13th, and it has already had a strong start with over 1 million visitors. Based on past expos, JR West expects the number of visitors to increase towards the end of the event. The JR West Group will fulfill its role as a transportation provider for expo visitors, while also working to increase the use of the Sanyo Shinkansen and conventional lines in the Kansai urban area. They aim to capture as much expo-related demand as possible through initiatives such as opening an official store inside the expo venue and utilizing their hotels, shopping centers, and other facilities. Through these efforts, the group expects to increase revenue by 37 billion yen and profit by 15 billion yen. Like JR Central, thanks to visitors to the Osaka Kansai Expo, this year's transportation business is likely to see an increase in profits. Mobility segment. In fiscal year 2025, transportation revenue increased mainly because leisure demand recovered during the second half of the year. For fiscal year 2026, they expect a fundamental rise in usage driven by stronger consumer spending, the positive impact of the expo, and higher inbound demand. However, they also anticipate that basic usage will return to the previous year's level in the second half of the fiscal year, due to the risk of an economic slowdown caused by the tariff. Real estate segment. The real estate business, which is the main part of their life design field, got off to a good start with the Osaka West project and Hiroshima project. They expect operating income to increase by 6 billion yen from the previous fiscal year, reaching 45 billion yen this fiscal year, by maximizing the benefits of these projects and because there will be no opening costs this year that they had last year. Consolidated inbound revenue. Inbound revenue is an important growth driver for JR West. In fiscal year 2025, JR West achieved record highs with inbound transportation revenue of 40.9 billion yen and total group inbound revenue of 31.4 billion yen, mainly by capturing strong demand from Asia. For the current period, JR West expects inbound transportation revenue to reach 47 billion yen and group inbound revenue to reach 36 billion yen, for a combined record total of 83 billion yen. JR West's financial strategy and shareholder returns. For dividends based on its basic policy of maintaining a payout ratio of 35% or more, JR West set a dividend of 84.5 yen for fiscal year 2025, which is an increase of 10.5 yen from the previous forecast, and plans to pay 86 yen for fiscal year 2026. Dividend amounts have been steadily increasing after recovery of COVID-19. JR West has been working to recover EPS and improve ROE through business strategies such as the Hokuriku Shinkansen extension to Tsuruga, funded by the public stock offering and city development projects. They are also pursuing financial strategies with a focus on capital efficiency, including a 100 billion yen share buyback. With the remaining 50 billion yen share buyback and cancellation planned for fiscal year 2026, the company expects return on equity for fiscal year 2026 to be around 10%, earnings per share to be around 250 yen, and dividends per share to improve further due to the cancellation. This would bring levels close to those seen before COVID-19. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 3,299 yen as of July 1st, and the US dollar stock price is $23.17 as of June 30th. The current PBR is 1.32 and the PER is 13.3, with a dividend yield of 2.61%. Compared to the past few years, the PBR, PER, and dividend yield are about the same. Earnings have been improving, and as its stock price has continued to rise in line with this, its stock price indicators remain at the same level. Compared to the past, the stock is neither undervalued nor overvalued. Conclusion. Revenue and income have increased for the 4th consecutive year and exceeded forecasts in fiscal year 2025. For fiscal year 2026, JR West is aiming for even higher operating income by leveraging demand from the Osaka Kansai Expo and its city development projects. JR West continues to strengthen its financial base through steady dividend growth and share buybacks, working to restore EPS and ROE to pre-COVID-19 levels while capturing rising transportation and inbound demand to drive further growth.